Cardano putting in a new swing low, around 25% to the downside from its recent all-time high. A lot of people wondering what is going on with Cardano. I thought it was bullish. In this video, I'm going to break down this entire dip and explain why it's a good thing. What is up, everyone? Welcome to Crypto Capital Venture. Hit that subscribe, hit that like, turn the notification bells on for the very best daily technical analysis and crypto videos. Let's jump into the Cardano chart. This is the 6 hour. You might be wondering, how are you gonna call this dip a good thing, Dan? And I'm gonna explain that, but I really want to dive in to exactly what's happening on the Cardano charts, and here it is on the 6 hour. What we've been talking about is very simple. We've gotten one touch, two touch to this lower trend line, and we've had a lot of space all down here. So we've been talking about the very real possibility to visit this range. Before we talk about this entire move on the micro charts, I want to discuss something extremely important on the macro. Here's Bitcoin, and this is Bitcoin all in the last bull market, and it really gives a healthy picture of what a bull market looks like on the weekly chart, namely the 20-week moving average. And you can see Bitcoin just consolidating to that area over and over again for these huge, volatile, likely scary swing lows for continuation to the upside. Now, this right here, you see separation from the 20-week moving average all in this current bull market. Bitcoin has not touched the 20-week moving average yet. Now, this signifies the demands of Bitcoin, the velocity of Bitcoin, which is what we've been talking about in recent Bitcoin videos, which is a good thing. This is bullish. But we always have to keep this 20-week moving average in mind. Now, digging into this, leading us to Ethereum. I want to show you an Ethereum chart last bull market. Now, here's the Ethereum chart. Ethereum in its first bull market was just going crazy. And at this point, and this is right around where we are this cycle. This was the June-July area of 2017, very similar to where we are this bull market. This was almost 300, it's like 270, 280% overextended from the 20-week moving average. And Ethereum saw a dip, around a month-long dip, 60 to 70% to the downside before continuation all the way to that like $1,500 swing high. Now, why am I talking about Bitcoin and Ethereum? First off, Bitcoin is just this huge data point we have to use at all times in terms of macro charts for all cryptocurrencies. Now, Ethereum is very similar in that last bull market because that was Ethereum's first bull cycle, very similar to Cardano now, because this is Cardano's first bull cycle happening right now. And what's interesting is you see this overextension of Cardano from the 20-week moving average around 200%, 200 plus percent. I mean, we're getting up there. Look, 270% overextended recently from the 20-week moving average. Remember, Ethereum in its first crazy parabolic bull cycle did the same exact thing. Now, this time around, Ethereum only overextended around 100%. Bitcoin only overextended around same 90 to 100%. So Cardano has been going absolutely crazy. And so it needs a cooling off phase. Now, am I saying from that swing high, we're going to see a similar 60 to 70% dip all the way back down to the 20-week moving average? No. Fundamentals are different now, even as they were different back then for Ethereum. There is way more adoption, and Cardano is doing huge things. So in terms of just institutional demand for cryptocurrency in general and what Cardano is building, I don't think we'll see a dip that large, but you have to put these things into context if you want to understand what's happening on the short-term charts. And so if we look at the short-term charts, Cardano is in a very much needed cooling off phase. And it's cooling off in actually this rising channel of higher highs and higher lows. So let's dig into this and see what's happening for Cardano right now. I want to start with this clip. This was from 2 days ago. So hours ahead, here's what to look for. Can Cardano approach this apex sitting at around $1.27, $1.28 and break that area? Also, so what we were talking about in that, you see the symmetrical triangle that I was charting on the screen. If we go to that hourly chart now, here is what we were watching. We were talking about a potential busted symmetrical triangle, meaning we get the pullback to the apex and we break it. That could have been a bullish move. We were tracking it potentially, but ultimately looking for resistance right here in this $1.27, $1.28 area. Where did we see resistance? We saw resistance right at $1.27 to $1.28. We bounced off of this trend line, which is extended now from that symmetrical triangle, and we trickled down. That was a short-term bearish move of resistance for Cardano. That is what I was looking for in that video. And another clip from that video to really paint the picture of this entire dip that is happening right now. At price range from that swing high to, say we get a swing low to like 95 cents, we're talking about a 36% dip. So why was I talking about a 36% dip in that video? Very simple. It is a huge key Fibonacci retracement for Cardano. It could be potentially a higher low, a bullish higher low, which is the last lower trend line touch that we did not see very long, around 80 cents, to that all-time high, swing high. And we have this Fibonacci. Let me zoom in on the chart a little bit. We have this Fibonacci support area all down here. And this is in that 95 cents to $1.07 range. Confluent with that is this lower trend line. This is what we were talking about in the video the other day. And if you just see these two squares in this video, and in case you missed this video, this is me talking about these two potential buy zones, these accumulation areas. Maybe a lighter buy in that $1.20 down to $1.10 range, which is where we are right now, and a heavier buy in that ultimate dip phase, that 36% to 95 cent range, maybe potentially a higher buy. It was an idea, and it was based off of a conversation I was having with a friend of mine. Potentially, you know, he was looking to maybe buy some Cardano. I said maybe those are some good ideas in terms of where you could buy a dip. And now we're in that first range. We're at $1.15 as I do this video, and this could be a good light buy, right, in terms of accumulating. This is not financial advice. I'm just talking about, you know, conversation I had and also my approach to these markets. My approach to these markets is to average into dips, whether it's in a bear market or a bull market. I just think accumulating dips is the way to go. And it's a fearful environment to do so. Cardano is down right now, around, right now, 23%, ultimately around 25, 26% recently. So Cardano's down, and it gets a little, as it gets even further to the downside, it gets a little tougher to mentally make that decision to buy. I get it. Buying the dips is uncomfortable. And that's why so many people buy the top and they sell the bottom, because of that fear aspect. But that's why I always say this is 95% mental, everybody. If you can get used to and comfortable with buying dips, you'll do way better than buying all of these swing highs. And in the long-term scheme of things, buying swing highs could ultimately work out for you. Maybe somebody bought this swing high around 95 cents, and then Cardano from that area actually dipped 30%. And you can just see this is a 6-hour chart. It happened so fast. So somebody might have bought the short-term top, suffered with just crazy panic in the short-term swing low, but ultimately right now they're sitting in profit, and they were doing pretty well to $1.50. So this is all perspective. And that's why you have to analyze your own long game. How long are you in this for? What's your risk tolerance look like? And make your decisions based off of that, and make your decisions based on the data in front of you. So the data in front of you from a purely technical aspect, technical analysis aspect, says that, again, as mentioned in the video the other day, this area right down here is 100% possible. And if we go to the daily chart, I want to just show you something. And this is why this dip is much needed for Cardano. If you just go over here, we open up the daily, you can just see the daily momentum oscillator, this RSI, it's just cooling off. It's a much needed cooling off time for Cardano. You can just see it was way overbought. We finally are really consolidating now down below the overbought territory. There can very well be more downside for Cardano, but ultimately in the middle of this bull market, it's what you want to see. If you want to see that next explosive move to $2, to $3, whatever you're looking for, whatever your own Cardano prediction is, then you have to see these cooling off phases. And going to the weekly chart, same exact thing. This is Cardano on the weekly cooling off, and it's extremely needed. If you go over to Bitcoin, and you look at the last bull market, you can just see very similar on the weekly chart. Bitcoin needed the same type of cooling off areas in order for it to just keep hitting those new all-time highs of ultimately getting to 20,000. And the same thing's happening for Bitcoin right now, maybe in a little bit different of a sense, but the weekly having these consolidation periods that we've been talking about on the Bitcoin videos. And then, we're looking for just these bullish continuations to the upside, but this is all macro. This is all zoomed out. And so when you start zooming in, what's required on the short-term charts can be a little painful to live through, but that volatility is much needed for bull markets. Now, the last thing to note is this 50-day moving average, such an important area for any cryptocurrency. It's just this area of gravity that I always look at. I always talk about. What is good right now is Cardano, recently was overextended from that area 140%, which is ridiculous. Right now, overextended from the 50-day moving average around 60 some percent, which is still very overextended. But we're really looking for Cardano in one way or another. If it's sideways trading and the 50-day moving average gets pulled into it, we're looking for Cardano to get pulled closer to that 50-day moving average for an eventual explosive move to the upside. That's what we want to see. And that's really what we've seen, kind of leading into all these consolidation areas. It's getting pulled into that 50-day moving average. So we need to give it time for that to happen. The most extreme of all extreme dips would just be some capitulation environment in which pretty much probably all cryptos are tanking, and Cardano could just have a crazy wick into the 70s, maybe even the high 60s, touching this 50-day moving average eventually, getting scooped up, I'm sure. That is my anticipation. There's so much demand for Cardano. There's so much on the roadmap. There's so much fundamentally happening. I don't think dips will last very long, but it's extremely important to analyze why the dip is happening, to understand it from a macro level, and to come up with a game plan. Everybody's different, everybody. This is the data, just sharing it with you. I hope it's of value. If it is, hit the subscribe, turn the notification bells on, hit the like. It really means a lot to me. I'll see you in the next video. God bless.